Good morning, good afternoon, good evening, wherever you may be in the world. I'm Hugh Morris, Senior Research Partner at Yen Group. Now, there are not many events that truly can be said to be global, but the launch of the latest edition of the Global Financial Centres Index, in this case, the gloriously entitled GFCI 38, is a genuinely global event. I'm delighted to welcome participants from all around the world to this august session. The agenda for the introduction is that I will get out of the way as rapidly as possible and get on to the main event, which is Mike Wardle, who's the Chief Executive Officer and Head of Indices at Yen Group, and is a deep expert in all matters GFCI. He will run through the results of the latest index, combining the instrumental factors and the participant responses. I will offer a few comments and observations, but then we will also get on to the second part of the main event, which is questions and comments from the audience, which I will relay to Mike. And we will close in about 35-40 minutes time. So without further ado, let me introduce the star of the show, our Chief Executive and Leader. Mike, over to you.
Thank you very much. Thanks for the introduction, Hugh. I'm Mike Wardle, CEO at the Yen Group. Just to say, if you haven't used GoToWebinar before, then the way to put a question or comment in is to find the Questions tab on the screen and type in your question. We will be recording today's event, so if you want to go back and re-watch, or you have friends and colleagues who might be interested, the recording will be up online in around 24 hours' time. So first of all, a word on the GFCI, where it fits into our research program. It's part of our long finance program, which aims to explore finance, economics, sustainability and technology over the longer term. And financial centre development, we think, is an important part of that future. Financial centres are, we think, where the ideas occur and the decisions are taken which influence the way in which we address some of the challenges we face globally. The GFCI is a factor assessment index. This means it combines perception data through the GFCI survey with a range of quantitative data using advanced statistical modelling, and individual assessments given by financial professionals across the world are associated with the quantitative data for that centre. So the methodology in effect use the survey results provided by those who rate cities to weight the quantitative factors that we place in the index. In terms of the GFCI world, we now are tracking in the full index 120 centres and another 15 that we are keeping an eye on. We call them associate centres. They haven't yet gained enough international recognition to enter the index. And the 120 centres includes this time the addition of Labuan, an onshore offshore centre in Malaysia. And one of the features of the GFCI is tracking the growth of those centres who are doing international business over time, from 46 centres in the first edition of the index back in 2007 to 120 centres now. And just looking at who responds to the survey that we run, we get a good representation across the board in terms of financial centre professionals, people working particularly in banking. They make up about a third of the respondents, but a really good range of responses from all the industry sectors. So to the headlines. First of all, in the top 20 centres, there's actually little change really. The top 10 places, ranked places, have remained unchanged. Tokyo and Zurich joined the top 20 in this edition of the index, but on the whole, there's remarkable stability actually at the top of the GFCI rankings. In terms of other headlines, New York continues to hold the top position in the index. It's now been in the first place since September 2018. London remains in second place, but has further closed the gap in the ratings. Hong Kong retains third position ahead of Singapore. But it's really interesting to note that only one rating place now separates each of the top 4 centres in the index. So a very small shift in index ratings might change those positions at the very top of the rankings. And as mentioned, San Francisco, Chicago, Los Angeles, Shanghai, Shenzhen and Seoul are unchanged in 5th to 10th positions. And it's a feature of the index. There's very close margins separate the rankings. In the top 20 centres, Dubai is up 1 place to 11th position. Frankfurt moves down 1 place to 12th. As I mentioned, Tokyo and Zurich have entered the top 20. Overall, the rating for centres improved very slightly. The average rating across all centres is up 0.6%. The largest increase in ratings was in Eastern Europe and Central Asia at 1.36. The lowest was Middle East and Africa, where average ratings rose 0.22%. Separately, we produce an index on fintech strength in financial centres, and I'll give a bit more detail in a minute. But Hong Kong has moved into top position in that index, followed by Shenzhen, with New York in 3rd place. And we still see a preponderance of Chinese and US centres at the top of the fintech index. Looking at regional performance over time, we do an analysis taking the average rating of the top 5 ranked centres in each region. And on this analysis, Asia Pacific edges into 1st position in this edition of the index, with North America very closely behind. But again, really close in terms of the relative position of those leading regions. And you can see in the top 5 centres that bunching of the top 4 with only 1 rating point between them. And you'll see that over time the difference in ratings have narrowed quite considerably. I mentioned fintech, and here the winner this time is Hong Kong, with Shenzhen in 2nd place, New York and Singapore and London following close behind. The story on fintech, however, there's been a real improvement in the ratings at the top of the charts. And it's worth also, I think, just picking up that Dubai rose 7 places in this analysis in GFCI 38 after a 5-place improvement in the last edition. So Dubai really coming up the rankings in terms of its fintech offering, and now in the top 10. Looking at the various regions, in Western Europe, London continues to lead in the region. There are 7 centres in this region in the global top 20, and 10 of the 33 centres of this region fell in the ratings in comparison with GFCI 37, but generally they're the ones further down the overall global rankings. In Asia Pacific, we have now 6 Asia Pacific centres in the world top 15. The average rating for the region is up 1.27%. Just 1 centre in the region fell in the ratings, so a really good performance in Asia Pacific. And as I mentioned, Labuan entered the index for the first time, entering in 60th position. In North America, we've mentioned New York, San Francisco, Chicago, and Los Angeles remaining in the world top 10, but Washington and Boston are also in the top 20. And there's a balance. 4 of the 14 centres in the region fell in the ratings. Vancouver fell 11 places in the rankings after its improvement in the last edition of the index. In the Middle East and Africa, Dubai and Abu Dhabi continue to take 1st and 2nd place. And just noting that Abu Dhabi is up 10 places in this edition of the index. Mauritius is up to 3rd place in the region, with Casablanca leading on the African continent, with Kigali following close behind. Tel Aviv fell back in this edition of the index, and lower ranked centres generally have fallen back as well. In Eastern Europe and Central Asia, Astana retains its lead position, very clearly out in the lead in this edition, with Istanbul and Warsaw following. Istanbul doing particularly well in this edition, up 19 ranked places. Turn to the Latin America and the Caribbean, Bermuda and Santiago, both up in the rankings to take 1st and 2nd position in the region, and generally a balance of centres moving up and down in GFCI 38. One of the analysis we calculate is reputational advantage. This compares the assessments taken from the Global Financial Centers Index survey, weighted for age, and compares it with the final GFCI rating, which incorporates the quantitative data. This table shows the 15 centers with the highest reputational advantage. This includes a number of emerging centers, but also includes the leading centers in the index. There's London, New York, Hong Kong, Singapore, all featuring highly in terms of reputational advantage. A high positive advantage on this measure suggests the reputation of the centre may be running ahead of the reality shown by the quantitative measures. So this is a sign to the centres that they need to be taking a look at what the underlying data is telling them about their overall performance. At the other end of that table are those centres with a negative reputational advantage. In these centres, the quantitative data suggests that they are performing better than their reputation as measured only by the GFCI survey results. So these are places where maybe they're not telling their story clearly enough, and maybe need to look to their marketing and how to get the real story of their success out into the world's financial community. I'm going to hand back to Hugh now for a few comments and observations from him.
Thanks very much indeed, Mike. So if we drill into some of the areas that make up the survey, we can see some interesting movements. If I can have the next slide, please. If we look at the industry sector sub-indices, so these are the opinions of people working in these sectors as to where the most highly ranked centers are, then New York has a pretty good clean sweep. But in insurance, folks in Hong Kong reckon that Hong Kong has the highest performing sector, and in those in professional services rank Singapore most highly. London then pretty much takes second place, with the exception of folks in fintech and trading who rank Singapore, and then you have Hong Kong, Singapore, New York making up the sort of top trio. So a consistent picture across the top trio. It then gets more varied. You can see that Seoul is ranked very highly by people in government and regulatory, and there are several other centers really across all geographies that take up the places in down to the sort of 10th place. So quite a varied picture below the top three. Thanks, Mike. The other critical part of the survey is the areas of competitiveness, and for those familiar with the survey, you'll be familiar with them: business environment, human capital, infrastructure, financial sector development, and reputation, and all the individual factors that make those up. We recalibrate those every GFCI edition, and if we look at what the results this time show for the areas of competitiveness, again, there's a slightly more mixed picture among the centers. Next slide, please, Mike. That will come through. That you can see that Hong Kong and New York are sharing top rank. Then you've got New York, London, Hong Kong, Singapore, and then the remainder of the three. So the top trio remain fairly consistently, even more so if you look at the top four ranked, when you're looking at New York, Singapore, London, and Hong Kong taking all the places. Again, then much more varied below that. So Seoul comes in 5th place in reputation and general, and many centers from different parts of the world then fill in the rest of the indices. So you can see that there's a huge variety, and these instrumental factors are really critical because they're generally pretty objective measures of the aspect of setting up the environment in which an international financial center thrives. They're quite hard to work on because very often they involve investment, they involve significant effort over time, but they are a substantial driver towards long-term success, and you really do have to have good scores in the area of competitiveness sub-indices if you are going to be a sustained top-performing international financial center. Next slide, please, Mike. One of the other areas that we've looked at and got people's views on are regulatory factors, because regulation and financial services go hand in hand. kind of whether we like it or not. It probably is a good thing in measure. And so we asked people looking and saying, what does it mean to them that will affect the view of regulation and regulation's influence? Predictability was seen as the most important factor in regulatory systems. And given the US administration's trump card, pun intended, is unpredictability, that's quite an interesting finding, which explains some of the challenges in the world. Quality, flexibility, and speed are the next in order of importance. Cost was ranked lowest for importance, but of course, as we know, all these things need to be kept in balance. But the measure from what we're being told from the GFCI is predictability from regulators is the most critical factor. So now we turn to kind of one of the really great parts of this, which is taking questions from the audience. And I do have a number of questions from our very loyal correspondent, Bob McDowell. Mike, turn this to you. So Bob asks, would you say that geopolitical events are actually having very little impact on the GFCI?
I think it's a mixed picture. One of the things you note is that places in the world where conflicts are happening are not performing very well in the GFCI. So Moscow and St. Petersburg in Russia, their rating and ranking is very much lower than it was before the start of conflict in Ukraine. Tel Aviv, as I mentioned, has fallen quite significantly in 2 editions of the index. So there does seem to be some effect in terms of conflict. But generally, the main impact, I think, on what's happening in financial centres is actually the impact on trade at the moment, which is having an impact on GDP growth generally across the world. And trade disruption is much more likely to have an immediate impact on what's going on. And really that's to do with uncertainty. Financial centres thrive and financial business ties when they have certainty over the rules of the game, and the lack of certainty over trade policy, particularly from the US, is causing some jitters in international trade, which has an effect on GFCI centres. But at the moment, it is not having a huge impact on the rankings and ratings that we're seeing in the GFCI data.
Thanks, Mike. Now, it's quite a specific question, which you may or may not be able to address, from Yusuke Konishi, saying Tokyo's ranking has risen significantly, but what is the biggest reason for this? And as a supplemental, also, what is missing if Tokyo is to rise back into the top 10?
Mm-hmm. It's funny because I did look at this, because when I see centres moving reasonably significantly, I do try to understand why. And so for Tokyo, there seems to have been an improvement in the assessments given by people as Tokyo's performance. So there's more confidence in Tokyo as a financial centre than there was in previous editions of the index. If Tokyo wishes to move further, I think it's paying attention to the underlying quantitative data, trying to analyse where they sit in relation to comparator centres. Their average rank in the quantitative data is around about 39th in the world, quite a bit lower than their average, than their GFCI ranking. So there is room for looking at the quantitative measures, which are most closely correlated with the GFCI, and looking to see where you can make an impact and improvement in those areas. Very happy to have a conversation offline if you would like more detail on that.
Thank you, Mike. Hugh Purser asks, is there any evidence that the power of the Chinese yuan is beginning to have an impact, specifically its growth as a trade currency and as a reserve currency?
And the answer is I haven't seen evidence yet. We have seen the emergence of the yuan both as trade and reserve currency, but at the moment it hasn't had an impact that I can see on the data in the GFCI. So it's probably too early to give a substantive answer to that question. I think there's no doubt that the world political and economic landscape is shifting. But that is true at any time. At the moment, I don't see any evidence that that particular issue is having a particular effect.
Thank you very much. Jochen Biedermann asks, does the data show any changes in global connectivity among international financial centers covered by the GFCI, e.g. due to increasing geopolitical tensions?
What a very interesting question. Jochen, I'll have to go into the data in some detail to try and work that out. On the whole, the answer is no. We still see a very substantial number of assessments being given by people working in different financial centers to other financial centers across the world. Trying to work out how that has changed over time is quite a big piece of analysis, but it's a really interesting questions. So I don't see any particular shift at the moment, but I'd have to really go and look at the data to do that, and we could always have a conversation offline again, Jochen. So I don't see any patterns at the moment, but I haven't had a close look.
Thanks very much. Further question from Bob McDowell. Cyber attacks are having very disruptive effects on commercial businesses. Is there any sense of the impact of this threat on the finance sector through the analysis of survey results?
We do take, one of the quantitative data measures we take is around security and IT infrastructure security, but it doesn't correlate very highly with the GFCI overall. So at the moment, we're not seeing an impact on the financial sector in terms of our analysis. Certainly, it's a major risk, and any financial institution will be taking account of that risk. But at the moment, we don't see it having a big disruptive impact on the financial sector or the financial services sector overall. Certainly, though, anybody who's watching what's going on will be trying to shore up their cybersecurity at all times, as it is a major risk in terms of outage.
Thank you. And perhaps let me round off, Mike, with one cheeky question of my own. I mean, you have a unique perspective on the development of the financial centres across the world. 18 years, what an impressive track record. Only 2 years off the 20th anniversary. I look forward to that.
Well, and the first research which underlay the GFCI was actually started in 2005. So we are up to.
No, there we are. We're at 20 years.
Financial sector.
What's if you sort of take a step back from being immersed in the detail, what are the kind of biggest themes that you think you have seen over that really notable period, covering all sorts of financial crashes and rebirths, geopolitical disturbance, etc., etc.? I mean, what stands out to you?
I think that there's a couple of things. First of all, as I mentioned, the number of financial centres we're now tracking, the number of financial centres that are recognised as having international business and an international impact, as I mentioned, has risen from 46 centres to now 120, with others in the wings and waiting to come forward. And so the growth of financial centres in Asia Pacific, the growth of financial centres in the Gulf and Middle East, the growth in financial centres more recently in Africa is kind of the big ticket, and it's gone along with growth in trade. And we do think that international trade is a major driver of where and how financial centres develop and operate. There's a correlation between the two, we believe. The second one, I think, is the continued dominance of the centres which have been at the top or around about the top of the index for many years. And London, New York, Singapore, Hong Kong, Shanghai, they're all places where if you want to do international financial business, you can go to any one of those centres and find somebody who knows how to solve your problem, meet your need, and the strength and depth of the skills and knowledge base in those centres is the one which I would be trying to replicate if I were an up-and-coming international financial centre, really to get that sort of depth of knowledge and skill into my centre, so that I too could welcome all comers from across the world and say, we can solve the issue that you bring to us. Thank
you very much. Well, I think that's what we wanted to share with you, and the survey is now live. But of course, time moves on, and you'll be delighted to hear that in only 6 months' time, on the 26th of March next year, we can do it all again with the Global Financial Centres Index 39. But for those of you, and I'm sure it's most of you, who can't wait until then, please note that on the 30th of October, the Global Green Finance Index 16 will be published, and on the 27th of November, the 11th edition of the Smart Centres Index will be published. So please, as Mike said, yes.
Just before we finish, there's another question come in from Abel
Sorry,
Abo, talking about.
Please, I didn't see it. Forgive me.
That's right. He's concerned that the African Continental Free Trade Area isn't showing as positive for the African centres as it might have done, and asking if that's the case, why. The issue, I think, is that there has been improvements in the positioning of African centres, particularly African centres. You know, I mentioned Kigali, I mentioned Mauritius, Casablanca is still performing well in the index, but these things take time to work through, and still, I think the go-to places to get financial support for trade in Africa may not be in Africa. And so the trick, I think, here is to continue developing skills, knowledge, experience, and expertise in African centres, so that people have the option either of financing trade through one of the big established global centres, or going to a local African centre. And I don't think we're quite at the stage yet where people feel comfortable to go to many of the African centres to get that kind of support. It's coming, I'm sure, and we continue to watch African development really closely because we think it is on its way.
Thank you very much, Mike. And Abel, my apologies for not seeing the question. Given the growing importance of Africa, it's really essential that we continue to cover there. So I think that does draw us to a close. My thanks to Mike. My thanks to all of you for attending and for the excellent questions. As Mike said, in about 24 hours time, this will also be up on YouTube, so friends, family, and associates can also view it. In the meantime, go and read the report and enjoy. Thank you very much indeed.
Thank you. Thank you, Hugh.